Welcome back. You're still here, and I just have to show you one more page before I get you to try a problem. These are the three statements we've been talking about: the income statement, the statement of stockholders' equity, and the balance sheet. And I want to go on and get you a good start as to how to set them up so that you can do problems in the book and the sample problem that I have with this. So let's go back and talk about the purpose of each one of them. I already reviewed that in a minute ago in another video that you might have watched if you didn't go get something to eat or forget or give up. So the first statement that you do, and you do them in this order, and you only have things go on one statement unless they're calculated. So if you can remember that, that's going to help you a lot. The first statement you're going to do is do the income statement. And what did we say that showed? The profit or loss of the company. So everyone has a business, and they're in business to make profit, but if they don't, there's a loss. And the formula for net income was what? I just went over that. Revenue less expenses. Revenue is whatever you're selling. So in the example we were talking about before, we were selling Expo markers. So the revenue comes from the sales of the Expo markers. It can also be service revenue, consulting revenue, anything that you're in business that you do to run that business and to make that business. The expenses are the cost of running that business. So the expenses of selling Expo markers would be the markers themselves. They would be the salaries that you pay to the people that are selling them, the expense of leasing a place. Anything that it takes to run that business is an expense. So what you have left over is the net income. And of course, as we said before, you could have a loss. If your expenses are higher than your revenues, you're going to have a loss. The second statement you're going to do is the statement of stockholders' equity. And you can find that in the book. And you can make yourself a template. I find that sometimes students, if they make themselves a template and they do that for a while, that helps them learn how to do them. So this statement is showing you exactly what happened to the two components of stockholders' equity: common stock and retained earnings. Now, a company sells stock to get started, so they've got some already, perhaps, and in the second year, or if this is the first year, they won't have any balances on this top line if you're just starting the business. So when you sell common stock, it's called issuing it. So if you issue common stock, then this will make common stock go up. So again, if you had no common stock and you issued some, you'd have a zero there, you'd have a number here, and then you'd get a total. Retained earnings is what? We talked about that a minute ago. It's the net income for the life of the business less something. Right, dividends. So in retained earnings, if this was a beginning business that we never had anything happen before, we would have a zero here. But if it wasn't, we would have last year's retained earnings. So if you have a list of accounts on one of these problems and it's got retained earnings in it, it goes here in the beginning balance. The next thing you add, and you can see my little red arrow, kind of, comes from calculating the income statement. That is why it's so critical to do the income statement first. If you do the income statement first, you've got net income, and then you move it right over here and put it into retained earnings. Retained earnings then becomes the beginning balance, the new net income, less any dividends. Those three things. Of course, you don't have to give dividends. This will give us a new retained earnings. So we have a new common stock, a new retained earnings, and we get totals over here. And I think I said foot and cross foot in class. We just need to add down, add across. Any number that goes over here and is added across, if there's a zero in one of the columns, you get numbers over here. And then this number added to this number should equal that number. Pretty easy. Good for Excel templates. So these two common stock items are going to go somewhere else. So I want to point that out in a minute. Now, if you can see the balance sheet down here at the bottom, it looks a lot like the balance sheet equation, doesn't it? It is, but it's a more formal way to show it. So we have our assets, and you list all your assets here and get a total. And then we have our liabilities and stockholders' equity on this side. And you can do this in a different format if you want. You can do it a little bit. You can do it all vertically if you had a long piece of paper. So you will list all your liabilities and get a total of your liabilities. And you will list your two stockholders' equity accounts and get a total there. Now, where do these come from? Right, up here. So the common stock that we got here, we had to have done this first before we could put it here. Again, if you're looking at a problem and they have common stock on the problem, a lot of people make mistakes by putting that common stock when actually some extra stock has been issued. So you need the new common stock to go here and the new retained earnings, or you won't balance and you'll be looking everywhere, and that's what you've done. So once you've got the liabilities and the total equity, you add those together, and what should happen here? These must be the same. And I have a little green arrow that says the assets must equal to the liabilities and stockholders' equity. Does it mean you're 100% right? Maybe not, but you're not right if they aren't the same. So I want you to try that. I've also put the format here, and there's the name of the company always goes in the top line. Whatever statement you're having goes in the second line, and then the third line of the heading is different for the different statements. If you see the balance sheet down here, I've said just date and I put a star. So if this is at 12/31 of whatever year, then you just put December 31st. But for the other two statements that are a little bit more complex, and you put them for the period ended because they happen over a period of time. That's critical, and you're going to learn to practice that as you do this next problem. Now, there's some problems in the book. There's some samples in the book. I'm also going to assign some on Blackboard. Good luck.